You've heard about how bank stocks are too big to fail. Well, some of them are starting to get a little bit smaller. Citigroup announcing on Wednesday it is cutting 11,000 jobs, 4% of its global workforce, and perversely, shares are surging. Other bank stocks also rising. Maybe the thought process, the hope here is that companies like JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, all of them may need to trim some of the fat as well, cut themselves down to size so they can be more profitable with lower staff levels. You got to wonder, though, how much can that really last? I think the problem for banks right now is, yes, they were probably too bloated during the build up to the Great Recession. There's still a lot of room for them to lower costs. But at the end of the day, should really investors be rewarding bank stocks for cutting staff, which isn't necessarily the best news for the macroeconomy? I find it a bit strange that a company like Apple, which is a cheap stock in a dominant position in its market, continues to slide from its all-time highs, even though there's really nothing that's fundamentally changed all that much. Maybe sentiment a little bit, but with banks, they get rewarded for a lack of success. It really is something that makes you just, you wonder why some investors are distrustful of the stock market. This pretty much does it right here. Good companies, good news, they're falling. Bad companies, bad news. Hip, hip, hooray, because guess what? Lower costs mean higher profits. Who cares about all those human beings who've lost their jobs?